All right, as most of you may know by now, history was made again today with Bitcoin hitting $94,002 at the time of this recording on Coinbase. This was, I think, for the most part, a bit unexpected from the crowd that has been feeling a little bit nervous of a top as of late, at least according to the data and anecdotally what I've seen and many of you have likely seen on social media. Lots of people calling for a top once it hit 90K, expecting that they could buy back in at 80K, maybe even at the 70K level. And as many of you who have followed these videos have seen time and time again, when the crowd is still bullish long-term about something, but they try to get cute and profit take in order to buy back lower, usually that plan doesn't hash out unless they're in the minority, and most people are finding that plan to be crazy. But in this case, I think it was kind of a common narrative for a lot of people expecting prices to retrace. They haven't yet. We will see what happens now that we're in the 94K area and we're within relative inches here of the six-figure mark for Bitcoin for the first time in history. Obviously, that's a massive, massive psychological support level or resistance level, depending on how you want to look at it. I guess it's a resistance because we haven't seen it yet. But the media will absolutely go nuts and give Bitcoin and crypto a ton of exposure if and when it gets there. I think most people watching this video believe it will eventually get there. We put out a poll out showing that well more than half of the crypto community believes we're going to see 100K Bitcoin before the end of the year here. So all that being said, we're going to do just a quick mini data breakdown before our more comprehensive This Week in Crypto video coming out on Friday. We can see Bitcoin here only up a little over 3.5% in the past week, but obviously that's been due to a lot of ranging after just about a week ago. It broke 93K for the first time. Now it's above 94K. We see a few others, XRP having a massive week at plus 48%, Cardano up near 25% in the past week, Pepe, another one, plus 32%, Stellar 68, Hedera almost doubling, and Mantra over doubling, 155% or so market cap growth in the past week. So massive gains all around. Once again, you still see plenty of altcoins in the red. Most of the ones in the red are the ones that saw really good performances in the first half of November, and we're seeing a bit of regression to the mean. Tale as old as time. Some altcoins break out while others lag behind. Then everyone latches onto those altcoins that broke out a couple weeks ago, only to watch them fade and see new altcoins have their own moments in the sun. So that's kind of what's going on the price end of things. Overall, crypto's market cap is up about 3.5%, which is notably a little bit below Bitcoin's 3.7% gain for what it's worth. So altcoins on average are still trailing Bitcoin just barely. That wasn't the case in the first half of November though. And volume, so this is kind of what's going to be the narrative of this video. Volume is actually down 46% compared to the week prior, which was kind of the reaction to Trump being elected, the US being the biggest crypto trading country in the world, having a pro-crypto leader for the next 4 years, tons of excitement around that. So now volume has kind of cooled off. Heading over to some metrics. So one thing worth watching right now is Binance's funding rate, showing a lot more longs than shorts at the time of this recording. It's not quite at the extreme level that we saw about a week ago. And obviously in hindsight, that didn't really matter too much. Even when we kind of go granular, it was a very temporary top that we saw here as Binance's longs were super high. And then we saw kind of a ranging period up until the breakout that kind of happened in the past 24 hours. So still not the best sign that I'm seeing more longs than shorts here on Binance. We'd like to see it tick down. Also, the open interest is through the roof. So all the margin and leverage and futures positions that are opened right now it's absolutely skyrocketed. If we go back in time, we haven't seen anything close to this since June of 2022, when a bunch of longs kind of got liquidated and people gave up on crypto, which in hindsight was right around the eventual bottom that occurred in November, when the FTX collapse happened. Long story short, though, yeah, there's a lot more polarization going on, and that's why there's all these open interest positions that are just booming right now at its highest level in, what is it, about 29, almost 30 months. Utility-wise, daily active address, it's high, but relative to the year, but it's still not close to where we saw in March, when we saw the then all-time high going a little above 73K back here. So it's interesting to see that even though we're, roughly 25% higher than where we were in the March all-time high, the utility just isn't quite there. And I think this is just due to a lot of people fading over the past 8 months and not quite jumping back in because they missed the rally. So even though this rally is creating some level of intrigue, as any all-time high will, it's not to the extent where it's bringing back all the hordes of people that were causing the daily active addresses and circulation for Bitcoin to be quite where it was back in late February, early March. So it's funny how this psychological impact kind of changes, even though prices are higher now than then. Lastly, on Bitcoin, I want to mention that the 30-day MVRV is high, but not extreme. So anything above about 15% here is what we deem around the arbitrary danger zone. And we saw the 30-day and the 365 well above that about a week ago, and then we kind of had that local top. I'll zoom in here just for a moment so we can see the price a little more granularly. So you can see right here, that's where it got to its highest level. And then we saw this red candle that spooked a lot of people. We got down to about 87K, and then we kind of resumed the party. But I still would say, be a bit careful. The line moved here. So this is the danger zone here. You can see how it retraced right until it got below that line again. But still be careful when Bitcoin's average returns over the past 30 days for any wallet active in the past 30 days is in the double digits. 0% is what we hover around historically. And as long as 30-day MVRV is well above, you would be buying or adding on to your position with increased risk. Same with 365-day. Average wallets that have been active in the past year are up about 40%. And I lied, there's one extra piece of info on Bitcoin I wanted to mention, and that's the fact that whales are still looking pretty good, but you can tell that they've slowed their roll a little bit on the accumulation over the past 4 or 5 days after just going nuts here during that first initial week after it was made official that Donald Trump was the next U.S. president, with his tenure kicking off in January. All right, so I also want to mention a few updates we just put out today. Mean dollar invested age. So this is what's been going on since November of last year. Almost exactly a year ago is when we started seeing the pattern of dormant coins from these large wallets moving out of those wallets and back into circulation, especially from November up until that eventual all-time high in March. That's when the line here was just decreasing rapidly because the average age of coins was decreasing due to all of those stagnant coins moving back into circulation and being in fresh wallets, making them on average younger inside of the wallets that they respectively were in. Then we saw this kind of flat period as ranging happened, and traders gradually got kind of spooked and worried themselves that 73K was that top that they should have profit took in. And then eventually we get the Trump just absolute bullish eruption here en route to the eventual new 94K all-time high. And you can see that it's starting to go down again here at the very edge of the screen. That's a very good sign. It's a validation that we are still in what you would call a bull market. I know that that term is thrown around very willy-nilly at times, but yes, as long as the mean dollar invested age line is continuing to move down, that means whales and larger wallets are still circulating those old coins back into circulation, thus creating more bullish momentum for crypto to be in. Look for age consumed spikes, by the way. The last huge one happened in late May, and that actually marked a top as Bitcoin was trying to rally to get back above 73K, and then it fell. So if we see another little blue line here, I know it's kind of faint on my screen, but if we see another one that's, at least 2/3 of that size, it's a sign of a possible price reversal coming up. Also worth noting, Master, the coin Master is trending due to MicroStrategy just continuing to erupt. The stock is through the roof at the moment as Saylor and company are reaping the rewards of their strong bets on Bitcoin really for the past few years, but they continue to add more, making announcements of several billions of dollars of purchasing, and that's boosting their credibility a lot and giving a lot of discussion around not just the coin, but I would guarantee the actual stock, drawing a lot of people's interests right now. And of course, Bitcoin at number 2. I won't go through all of these now, but on Friday, I'll give a more comprehensive look at whatever coins happen to be trending at the end of the week. And last but not least, just a quick update on ETF volume, still very high. Now, we made an announcement last week as we saw the top 7 ETFs erupt to the highest level since the literal day that Bitcoin topped back in March. Now, this time around, we didn't see a very long top, but this was a short-term local top right when volume got high, and now we're seeing volume get high again. So just keep that in mind. This isn't necessarily a bad thing because we're not showing inflows and outflows. We're still collecting data so we can give you a total inflow-outflow chart, which I think will be even more useful than this. But note that the ETF volume is exploding. A lot more people are looking at Master, the stock, to invest in that without having to hold coins on the blockchain. I think this is overall good, though, because it's bringing in new stock traders and equities holders who traditionally haven't been into crypto or have avoided crypto up until now. And they're really starting to generate a ton of volume on all of those ETFs that were first launched back in mid-January. So 10 months later, still plenty of encouraging signs on the ETFs being active. All right, all that said, guys, hope you're staying safe right now. Remember to not trade emotionally. That is one piece of investment advice I'll give. But for everything else, trade with your own strategies in mind and understand we're here to give the data and nothing more. If you like what you see, sign up for a 2-week free trial at Sandbase. Link is in the description, and I'll talk to you guys soon.